Hey everybody, welcome back to my channel. It's Nasdaq with Arshia back with another video. We're going to be talking about what's happening in the stock market next week and what might happen. So before we begin, I want to say I'm not a financial advisor and you should always do your own due diligence and research before taking part in any investment scheme. Let's get into it. All right, and while I share my screen, please be sure to hit the subscribe button and bring a favorite snack. For me, I got my pretzels. All right, so let's get started. So earnings season is the next big test for the market and value stocks in the week ahead. So let's talk more on that. Earnings season picks up momentum in the week ahead with big financials like Goldman Sachs and Bank of America reporting, along with Procter & Gamble, Netflix, and many household transport names. The earnings period could shape up to be the test of a theory by many investors that value and cyclicals are set to outperform tech. So basically, the non-techs will outperform the techs. The Treasury market may be quieter in the 4-day week because the Federal Reserve officials are in a quiet period ahead of their 2-day meeting beginning January 25th. And this is a bit old because we already had we are already having like the process of the Fed meeting, but yes, there will be a 2-day meeting beginning January 25th on the Federal Reserve with their officials. The market focus in the coming week seems to be turning towards fourth quarter earnings, and which are expected to reveal stronger profit growth for economically sensitive stocks compared to technology players. The earnings period could test a theory that value and cyclicals are set to outperform tech stocks again. It will also be a time where investors get a first-hand look at how companies are dealing with inflation, rising prices, and by the way, inflation actually rose on a 7% annualized basis during the final months of 2021. And this was actually measured by a consumer price index, not me. And in my opinion, it's totally skewed with about 20% of the market, the earnings. And like the cyclical sectors, energy, materials, industrials, and discretionary, together expected to grow at 95 to 100%. Everyone apparently is expecting tech to do less than the cyclicals. Also, another thing that I'm actually quite shocked on, Netflix rises on price increase, but next week is the market's real test on Netflix. So the stock market actually had another tough week as 2022 hasn't gotten off to the bullish start that many investors had hoped to see. Some trends from earlier in the year reversed themselves on Friday, as it was the Nasdaq Composite that posted the biggest gains while Dow lost ground and the S&P finished the day close to unchanged. So late in the day previously, Netflix shares climbed abruptly with a big bump around like 3 p.m. that led the video streaming company stock finishing higher by more than 1%. Yet investors are actually still anxious about what next week will bring, as many key companies will report their latest results when earnings season kicks into high gear. What will happen? Okay, so Netflix shares were down most of the day before the late afternoon rise. Investors are always, happy to see the premier video service Netflix boost its prices. Yay! Earnings. And the go-to strategic move of them boosting their prices had the desired effect that everybody wanted. But the main test is, will it survive next week? Investors are expecting a peak in the stocks and stocks to finally perform in a bull market in March. And people are saying that we could be riding a roller coaster till then. So Netflix price increases will be nearly across the board. The standard Netflix plan will actually rise in the United States from $13.99 to $15.99, about a boost of 11% in prices. The most basic plan will see a $1 increase to $9.99 per month, and the premium plan from $17.99 will rise to $19.99. And apparently the various tiers allow viewers to watch show on 1, 2, or 4 screens with HD video available on top 2 tiers and Ultra HD 4K available only to premium people. I knew about the multiple screens, but have you guys ever heard of like the HD video? Not me. So the increases will take effect immediately for new subscribers. Existing subscribers will get an email notification and they'll have 30 days before they see price changes to decide. And Netflix actually explained that the move will bring in more cash to finance acquisition of more entertainment programming for subscribers. I feel like it'll be interesting to see whether in an environment in which there's far more competition for eyeballs and streaming videos than there used to be, like Netflix, Amazon Prime, HBO, Netflix still has the pricing power to be able to boost its prices without seeing a big jump in subscriber churn. So investors can expect to learn more. I think we'll all learn more when Netflix reports its quarterly results next Thursday. So the big question is, will it survive those earnings next Thursday? Okay. Also, one more thing. The jobs report and Fed, I have to address this, the elephant in the room. We just have to address that. So the December jobs report and the minutes from the Fed's last meeting could be big events for markets next week. Stocks are expected to benefit from the tailwind of a 27% gain in the S&P 500 for 2021 and its seasonal positives. But investors are also likely to shift their focus to the Fed's move to tighten policy, with a rate hike possible for as early as March. So, number one, December jobs report and the minutes from the Fed's last meeting. And basically what came from that is that there's possibly a tightening policy and an interest rate hike, not 3 interest rates, but 4 interest rates. Stocks are expected to benefit from the tailwind of a 27% gain S&P for 2021 in March, according to analysts. And seasonal positives will benefit in March. Till then, we could be riding on a roller coaster, but investors will now focus their minds to the tightening policy and the earnings on Thursday. So Peter Boockvar, Chief Investment Officer at Bleakley Advisory Group, says that the impact of tightening policy will be felt globally as other central banks also reduce their asset purchase programs and move toward raising interest rates. So, in conclusion, we are riding through a bloodbath right now, but things could either get better or worse with earnings, and everything now will depend on the earnings. Thank you guys for watching this video. I hope you enjoyed this video. If you found this information helpful, please be sure to like, comment, and subscribe. Thank you so much, and see you on the moon. Bye-bye.